live here, we're live there, we're live here, we're live everywhere. Good afternoon, everyone. This is Roman Shersher, your number one online resource for buying property, with this week's episode of Buy, Invest, Sell, a broker's formula for real estate success. So it's March 21st, 2025. We've got a lot of good stuff to go over. There's been some news, a lot of movement in the market right now. I'll go over that in just a moment. But before I do, please remember, if you guys like this video, I'd really appreciate it if you could hit the like button and share it on social media. It helps so much to get the message out. Just tap the share button, share it with your friends and family, please. All right, and to anyone watching on Instagram, that's that camera there, be sure to head over to Facebook or YouTube after this to check out the links in the slides to the content I'm about to go over today. As always, I give you raw data. I definitely give you my opinion when warranted, but everything's based on the actual data that we're seeing in the market, both here in California as well as nationwide. Before I jump into our content and our current projects, at this point, over the course of 18 years that I've been doing this, I've bought and sold hundreds of properties here in California and in Florida. I wrote a book about the insider's tips and tricks that I've used to really save myself money, save myself in costs, fees, and in some cases save tens to hundreds of thousands of dollars when purchasing real estate. We're still experiencing very high demand for properties nationwide. Our months of inventory, which is how they measure it, is only at about 3, which is just a really steady, not a fast-going market, not a slow market. So right now, it's still good opportunities to go out there and then use tips, techniques, tactics in order to get your prices down, get the best deals. If you know how to buy right, there's still tremendous opportunities out there. So if you'd like a copy of the book that I wrote, please just DM me below. I'd be glad to send you the ebook version, and just reach out and let me know. Okay, reach me on any platform. Let me know you want the book, and I'll send it to you. All right, current projects. We closed on 2 transactions just this week. This is how busy the thing right now it is in the market. Congratulations to our sellers in Sherman Oaks and in Glendora. We have another transaction we're working on in Westlake Village. We got an amazing deal for our buyers out there. The appraisal came in $150,000 above the price that Liana and I got for them. $150,000. That's how good we are. And it's just about knowing how to negotiate right, which comes with experience. We have a property that's about to sell in Jacksonville, Florida. We're renovating another one. We got another one in contract. Things are very busy. And most importantly, we have 2 properties that are going to come to market within the next 2 weeks. One in Woodland Hills, a beautiful flip that we did. It's a 4-bedroom, 3-bath home with a section that you could completely section off as an ADU. Pool, beautiful, south of the boulevard in Woodland Hills. Reach out if you know anyone that's looking there. And also one in Northridge, a beautiful 5-bedroom, 3-bath home in Northridge, prime area right next to Sherwood Forest. If you know anyone that's looking, reach out, please. All right, let's get into our content. All right, let me share this here. Share, let's see. Hopefully it works this week. Yep. All right, our content's up. All right, first things first, let's talk about the California housing market. So we've been living in an anemic sales market for quite a few months. Luckily, February brought us back, okay? The February California home sales, they rebounded after a sharp January decline. Housing inventory remains still tight right now at about 3.2 months, but we saw a tremendous amount of home sales in February. Home sales have been steady under 300,000 since September 22. Okay, this is very low. We've been down as low as 230,000. For an annual basis, it's very low home sales in California. Right now, we saw a major uptick sales marked an 11.6% increase from January to February and a 2.6% rise from February of last year. So this is the highest level we've seen since October 22 when sales jumped up this last month. Our median home prices rose as well. We're at right now, median home price is $829,060 in California. That's in February. It's up 2.8% statewide year over year. So people have said forever, so many years I've heard people say, oh, interest rates are crazy. Prices are for sure going to fall. People predicted, one person told me that they thought prices were going to fall 50% in California. Okay, we have had 0 years of price declines since the rates have gone up, 0. And through the this February figure, we're showing a 2.6% rise in the state. In the LA city, it was much higher. I reported on that last week. It was something around the neighborhood of about 9.3% year over year median price increase. Okay, now that price declined 1.2% from January. But we're still, year over year, we're up, and our housing inventory remains tight. What else is in the news? Well, everybody's waiting for these rates to fall. And so the Fed had their meeting, open market committee meeting, and they determined just Wednesday, just 2 days ago, that they're going to hold rates steady this month. There's a couple of reasons why they decided to hold rates steady in March. Number one is you have inflation slowing, okay, but there's still some pressure on inflation that it could still go up, especially with the job cuts that we're seeing in the public sector with Doge and everything. So we're concerned, of course, that it could lead to short-term inflation. We have resilience of the labor market. So we still have not seen those job cuts hit the market. We're going to see what those March numbers look like for the job cuts. And then lastly, there's still concern about global economic uncertainty with all the tariff talk, with everything that's going on out there. The Fed decided, you know what, the best thing, the most prudent thing to do right now is to hold the cuts steady. Now, having said that, they said that they do see another 0.5 percentage point of rate cuts throughout this year. They're going to likely come out and cut a 0.25 point the next opportunity in 3 months, I believe September, and then another one, 0.25 point rate cut in December. That's their current plan at this point, and we'll see what happens in the economy if that will hold steady. All right, what's happening with mortgages? Okay, let's share this tab here. All right, mortgages. All right, so the last time I gave you an update 2 weeks ago, our 30-year was fixed at 6.7. It's now up to 6.72. So relatively steady. It's not really moved significantly. It was up, down a little bit, down a little bit. Now it's up a little bit. Our 15-year fix was 6.17%. It's now 6.13. 30-year jumbo was 6.96%. It's now 6.90. Didn't move. In the last day, our 30-year FHA was 6.14. It's now 6.15. Our VA was 6.16. It's now 6.17. So these rates remain, they're still remaining historically high, but we're down from the highs back in January. January, our high was 7.16. So the rates have come down. It's actually created quite a bit of mortgage movement, and it's one of the reasons we saw an uptick in sales in February. Okay, what does this mean for us? Number one, sales recovery. So February's slight rebound in sales suggests buyers are actually adjusting to these higher rates and affordability challenges. I gave a number, I believe it was 2 weeks ago, about housing affordability and how we're at some of the lowest affordability levels, especially in the city of Los Angeles. We're at 14% affordability, 15%. Only 15% of people making median price income can afford the median price home in that market. Very low, but it seems based on our sales recovery that people are adjusting to this. Number two, stability with the Fed. The Fed decided to hold rates steady. That'll create more stability for these mortgage markets. So hopefully we won't see price increases or rate increases. Hopefully it'll continue to slide even while these rates have held steady. Inventory challenges. We still have a tight inventory market, okay? We still have only 3 months of inventory on the market. We have 30% more inventory than a year ago, which sounds like, hey, we should see prices falling, but that's still very low inventory. We're still only at three months of inventory. So if I had some advice for my buyers and sellers out there, number one, for buyers, the combination of stable rates and slightly improving inventory, it still has a lot of good opportunity for the buyers that can act quickly. Look at my buyers in Westlake Village. Because we acted quickly, we moved fast, they have a backup buyer right now. They have a backup offer. But because we struck fast, we were able to get in at a really good price. We appraised at $150,000 above. Secondly, for sellers, price positioning is crucial. Okay, you cannot price yourself too high in this market. There's other options for the buyers out there, and they will go to those other options. If you price yourself too high, you're going to be sitting on the market, and then you're going to constantly be chasing yourself down. And the worst part is when a buyer goes into a property that's been on the market for 3 months and sees these price declines and thinks to himself, what's wrong with this property? Nobody wants that property. They want the hot property. They want to be the first one that gets their offer accepted. I always tell my sellers, your first buyer is typically your best buyer. Unless it's a ridiculous offer, they lowball or something like that, your first buyer is typically your best buyer because they have wind behind their backs, okay? They don't know, and the way we position our sellers when we're selling property is that, hey, if your buyer wants this property, we got a lot of other interest, hurry up and close, hurry up and give us your best offer. Make sure you put your best foot forward. All right. Okay. Our quote of the day. Let's stop sharing here. Let's go back. All right. It should stop in just a moment here. Okay. Quote of the day. Russell Shage. Real estate is an imperishable asset, ever increasing in value. Okay. This quote reminds us that an investment in real estate is long term. Okay. It's a long-term strategy. You have to weather the market fluctuations, but that's the best part about real estate. Okay, your stock market. I've lost in 1 month. I lost 20% with what's been happening in the stock market of my whole portfolio. Totally normal. That does not happen in real estate. And in real estate, if you're dealing with the right people, if you know who to consult, if you know who to listen to, you get advanced knowledge of what's going to happen in the market, and you can actually adjust and make adjustments accordingly, sell at the right time before the crash comes. And we were able to do that in the last downturns. We sold at the right time. You have to know how to sell, when to sell, and which properties to sell and which markets to get out of. All right. Remember, if you like this video, please help spread the word on social media. Just tap the share button and share it with your friends and family. Appreciate you spending the time. This is Roman Shersher with your Buy, Invest, Sell, a broker's formula for real estate success on March 21st. Have a great weekend.